It's a market that's more than doubled in the last 13 months or so, but it's one that not many people, I think, from a retail trading point of view, pay attention to. I think they're missing a trick. It's a really massively important market for the world economy. So in this video, we're going to take a look at copper in a bit more detail. When we do the live streams, I open it up and we can have a look at different markets. And copper is it's always quite a popular one, I think, whenever we're looking at it live on a Friday. So I thought, well, let's do a video on copper because it's really interesting what's happened. You know, we've seen plenty of other markets recover over the last 13 months. Copper has gone from about $2 a pound to trade recently up to sort of $4.40 a pound, $4.35 a pound, that sort of level. So it's a significant move. It's more than doubled. And if we take this chart out and take a look at a weekly chart, you can see where this move has put us. It's put us back to levels, almost a 10-year high, not quite, but back to levels not seen since August 2011. So it has been a really sizable move that we've seen in the price of copper. So I thought, let's take a look at it in more detail. So in this video, I'll talk a bit more about why it's so important, why some people think it's got predictive qualities when it comes to the world economy. And we'll see if we can get a trade on, because there's an obvious trend here. We don't have any trades in copper at the moment. So we've got the usual mix of trades going on. Silver is the only losing trade at the moment. Some of the best performers, NASDAQ is up £400, natural gas trade up 350. And I think we need to get a trade on for copper. So let me talk about it a bit more now, and then we'll come back and look at it in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd take a look at a market that we haven't looked at very often, but it's a really interesting market to look at from a long-term point of view and to trade in the short term. And that is, of course, the price of copper, as you saw there. It's had quite the move over the last 12, 13 months. So I thought, well, let's take a look at this in more detail. Why is it such an important market? What do we have to watch out for this year? And then go back onto the platform and see if we can set a trade up, because there is a clear trend there. And you know what a fan I am of following trends. So on this video, I'll talk about it a bit, then we'll jump back onto the platform and look at things in more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And we now do these regular live streams every Friday at 2:30 UK time. If you're subscribed with the alarm bell thing pushed, you get a notification off YouTube when we're about to go live. Right, let's get into it. Let's talk a bit about copper. Why is it important, and what could the rest of this year hold? So it's important because it has so many widespread applications in all types of industry, all across the economy. Two of its obvious applications is in electronics and also in power generation. So, you know, chances are, if you have some sort of electronic gadget, which of course we all have these days, there's going to be some copper in there. So it's a really fundamental part, I think, of so many products. So much so that demand for copper is often seen as what's known as a leading economic indicator. So something that predicts where the economy is going to go. You know, if we've had a tough time in the economy and we see demand for copper picking up, it may mean that consumers and industry are doing more and production is getting ramped up. So it can point to better times ahead. And of course, if demand falls off, worse times ahead. There was a study done in 2014, so about 7 years ago now, by the major Dutch bank, ABN AMRO. And it did find a correlation between the price movements of copper and world trade and global GDP, so the economic activity in the likes of China, Europe, and the US. ABN AMRO did find a link between copper. It's often referred to as Dr. Copper, giving it almost a PhD in economics, the price of copper, for its ability to predict where the economy may go. That's maybe taking it a bit too far. Nothing works all the time, but there is a definite link between copper and the state of the world economy. We've seen a great run recently. This year, we've seen the price of copper not quite get to a 10-year high, but trade back to levels not seen since August 2011, which is why I think that the rest of 2021 could be really interesting from copper. It has come a long way. If we go back to the lows in March last year, course, plenty of markets hit multi-year lows back then. But for the copper price from March last year to where we are now, the price has risen by 110%. So is there more to come up here near a 10-year high? Or actually now's the time to sell short? We'll jump onto the platform in a second and look at this. But first of all, let's talk about the big levels to watch. So with us, you trade copper in terms of dollars per pound. So the immediate hurdle, the highs this year, around $4.36 a pound. After that, it's the August 2011 highs coming in 10 cents higher, $4.46 a pound. Lots of recent support left on the way up. We'll examine it in a bit more detail at the moment, running from 385 through to about 394. So let's take a look at this on the chart, see what the rest of the year could bring. Are we going to see the price continue to gain as the year goes on? Is there an opportunity? Let's get on the platform and see if we can set a trade up. So let's start things off again, looking at this longer term perspective. I suppose, one of the reasons why perhaps we've seen the recovery stall somewhat or go a little bit quiet in recent weeks. These are big historical levels for copper. Going back to 2006, the highs came in around about $4.10, $4.15. Then we go back to 2011, the ultimate high was up around $4.60. So perhaps it's not surprising that people are thinking, or the market's starting to think, well, is it starting to look a bit fully valued up at these levels? And the trade I'm going to place is going to take account of that. But I do want to get a trade on. Let's flip this over to a daily chart and look at it in a bit more detail. So we always look for trends on these videos. I've got a definite trend in copper off those lows in March. Third touch came in October. I did trade it a bit for myself last year. Came out of the trades as it sold off from those highs. But I think it is interesting here. Yes, it has been pretty sideways for the last 6 weeks or so, almost the last couple of months, the price of copper. But that trend is still up. Okay, so I think there's a couple of different approaches here. The trend line support at the moment is coming in around $3.72, that sort of level. We've got more recent support after that near 10-year high. It traded back to 385, back down to there. So that could be one idea for when it comes to placing a stop. Looking at the RSI down here, went massively overbought on the way up. And as I often say, when we pick up on some strong trending markets, this is one of the drawbacks of RSIs. The price of copper, in February really started moving, and it went from 380 up to 436. So, almost a 15% move, I suppose, in the space of a few weeks. But the RSI went overbought. The RSI was saying, it's time to go the other way. So I think in strong trending markets, we can get wrong-footed by the RSI. The RSI has been a bit flat since then. It's nudging near overbought at the moment because we have seen a bit of strength over the last couple of weeks. But I don't think we're getting too much from the RSI at the moment. It's a slightly different story from the MACD. We had a buy signal. Interestingly, as the price was moving higher in February, the RSI was saying overbought. MACD was giving us a buy signal. So the buy signal back then in early Feb did a pretty good job of riding all the way up. Sell signal as the market turned a couple of days or maybe a week after the market turned. And more interestingly, what we've had since about the middle of April, a buy signal off the MACD. So the MACD is supporting a bullish case at the moment. For me, I want to trade with this trend. So there's a couple of ways of playing this. I think if we were going to be patient, then we wait and see, do we get a pullback? We've seen it banging around in something of a range since the beginning of March. Do we get a pullback back below $4 a pound? Use that as a buying opportunity with stops the other side of 385. I think that's definitely one trade. One way of buying into this trend is to buy the dip, the classic buy the dip strategy. And I think it's only if we start trading, through that trend line, through 370-ish, also the highs in early Jan. If we start moving below 370, then the risk is that trend has really run out of steam. But what I'm going to do, I'm going to leave an order here because I see this as perhaps more of a medium to longer term trade for the rest of, maybe not the rest of 2021, but at least for a few weeks, a few months. If the market breaks through these old highs, let's zoom things in. So the highs in, it's only back at the end of February, traded up to 436 was the high in copper. So the view I'm going to take, well, if the market manages to break 436 and sets another near 10-year high, it does look as if the momentum is coming back in. It's a breakout trade. Of course, with breakouts, there's no way of knowing if it's going to be a valid breakout, but I want to be a buyer if that level breaks. When it comes to setting stop losses, I'm going to use these old lows here as my reference point. So the 1st of April level, on the basis that if it breaks out, it really needs to get a move on. If it trades back to there, then I'm probably wrong. So that level was 394. So let's say I go 390 for the breakout, for the stop on the breakout. It's quite a deep stop. I think perhaps a more aggressive stop will be back in here around about 4.1, but I'll put it on initially at 390 and review it if the market breaks out and the trade gets filled. Let's set it up. So what I'm going to do, I think, is be a buyer at 440. So if it manages to get to 440, if it trades 4 cents through those old highs, put me in the trade and put a stop loss in at 390. Let's set that up. So I'm ready to go. So I'm going to buy 700 if the price gets to 4.4. So the price has to get there first. If the price sells off and chops around, that order will still be sitting there, but it won't be filled. I want to buy into strength. You know, we don't look at copper very often, so I want that order to sit there. And if we do get some strength at some point over the next few weeks, maybe over the next few days, then I want to be a buyer. So the price is currently 425. I would like to buy if it gets to 440, buying 700. If that order gets filled, buying at 440, then put a stop loss on the trade at 390. And that's for our usual risk, which if you've watched a few of these now, you'll be used to, of £250. Let's place that order so it sits there at 440. So that's it. The order's placed, buying 700 of copper. If it does actually get to 440, you can see it here, there on my chart, plus 700 if it trades up to 440. If I go to the portfolio, there's all those open positions we looked at before, but if I go into the orders section here, you can see there's orders there from previous videos, from crude oil video from earlier this week, gold from the end of March, and here's the one I just placed. So copper, buying 700 on a stop. It means the market's got to get to that level, breakout with a stop loss 50 cents away, and buying in at $4.40. So buying 440 with a stop at 390. And I think it's an interesting trade. It has been a great trend this year. Whether that trend's going to continue, I don't know. But for now, that trend is still up. One strategy, as I say, would be to buy the dip. I'm going to try and buy if it breaks out to new highs. And I think if it breaks out to new highs for this recovery, then I'd be targeting, first of all, about 460 from 2011. And if we break through there, perhaps we see even further strength. But a really interesting market, copper, and one well worth adding to your watch list if you don't follow it at the moment. That's it for the update in copper. If you don't watch it, it's a fascinating market to watch. We'll come back to it and see how it's performing. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.